So in every company, you'll see something fundamentally new, something that's changing the world in some sense, right? And the changing the world I think is what gets me excited, or the team gets excited, saying, okay, here's an opportunity. The founders are trying to build something which might change the world. And here's your opportunity also to be a part of that in the first place. That's a very optimistic way of looking at it. And I believe you have to look at it very, very optimistically before you say no, and give that benefit of doubt to the entrepreneur and founder to give a very optimistic story to you. Then you can criticize. And I think we have that mindset all the time. We keep that when we're evaluating. Founder, idea, innovation, something new.
Hi, wherever you're watching this, I hope you're doing well. Welcome to Startup Fridays, conversations with accomplished entrepreneurs and VC investors. I'm Hari Arakli, and in this episode, Vinod Shankar, founding managing partner at Java Capital in Bengaluru, talks about his passion for backing deep tech entrepreneurs. Shankar started out as a software engineer, but his insatiable thirst for knowledge has taken him from a software startup to leading marketing for a library chain to angel investing to eventually working with a VC firm before starting one of his own. Vinod talks about why he wants to invest in deep tech ventures and how he identifies entrepreneurs worth backing. So Vinod, thank you so much for this making time for this conversation. Really appreciate your time. You started your venture firm, I think, a little bit before COVID really became big, or in the middle of COVID. So that, I guess, itself must have been an interesting experience. Before we get to that, for a more general audience, if you could give us a quick snapshot about your journey from electronics engineer to VC investor. And I see that there have been lots of interesting sort of experiences along the way. You can give us a snapshot, we'll go from there.
Hey, thanks, Hari, for having me on the podcast. Firstly, I think I've been listening and been a big fan of what you've been doing and focusing on, especially on deep tech. Very few people do that, and I think I appreciate that, and for pushing us to do more, in that way. About me, as you said, right, I call myself a Bangalore boy. Studied at Ramaya in Bangalore, electronics and communication. Passionate techie, used to edit the newsletter in college on technology. And from there, joined a startup in Jeevan Bhima Nagar or Indranagar called as Emused. And that was my first startup. I think I had a choice between, going to a Wipro or an Infosys versus this. I chose to work in a startup. I think that's where the twist in the tail started, very early in the career. And that startup fortunately got acquired by Sequoia US and KKR at that time. And in the first year of my journey, I'm seeing a startup, a bunch of founders and employees, having ESOPs exiting and founders quitting and starting another company. And then you have Sequoia and KKR in the middle of all this. I think unexpected for a 24-year-old to see all this, in the first year of the job. I think that set the motion in place, I feel, even till date, right?
When is Emused, by the way? 2006?
I joined in 2006, and the acquisition was between my appointment and my joining, just in the middle. And they acquired eventually about 6-7 companies and packaged it together and made it into Aerospace, which is a large company. And that journey was interesting for a couple of other reasons also. In a sense, my skip level boss there, right, was Rajesh Srivatsa, even though I didn't interact with them on a day-to-day basis. But Rajesh went on to, start a venture capital firm called OJIS. And I used to sit right next to his cabin. I was kind of looking, what is he trying to achieve? He's a PhD from IBM, all that. So that kind of also gave me a window into saying, there is this other world called venture capital. I've started seeing, ESOPs and a different kind of wealth creation happening within the company. And I felt, if you be an employee, right, I think you are never going to make it. That was my first thought. And coincidentally, right, Talib's book, especially right on outliers, that he talks about, controllable black swans. And I was reading those kind of books in that phase of my life. That also influenced me saying, look, you have to chase some non-linearity in life, one, which Naval talks about today, right? But I think that's the story for me even then. I didn't know it's non-linearity. In that sense, you can't do things which can just earn salary. That's what I was thinking. You can't be an employee forever. And that put me on the journey to think and observe what's happening in the startup space. And I used to follow all the startup news, be a TechCrunch in the US or Gizmo gadgets in the US again, and the CES. A lot of these, was part of my time. And also I was working in mobile telephony, writing codecs, writing, processor level stuff, assembly language, hand assembling code to optimize and squeeze every little cycle. And that was like, because the processor not as powerful as today, right? And I luckily had a chance to even work on, neural based algorithms even then. Today we talk about a lot of AI, right? I mean, we were doing it, but we didn't really, the hype was not there. It was a winter again still for AI. And today I feel all of this is what really is giving me an edge on, what I do today. My ability to understand technology is way better, I feel. And that mix, right, of having written technology code and passion for doing that is what brings me to this journey, I think, to do deep technology investments today. And of course, tech alone is not sufficient. I realized from day one. And my second job was another startup I joined Just Books, which was getting incubated at NSRCL at IIM Bangalore. But even before I joined them full time as a marketing head, right, I took a franchise of their outlet. I became an SME entrepreneur, if you wish. So I ran an outlet in Malleshwaram locality in Bangalore, a library of 10,000 books, and that was a dream, believe me. Having 10,000 books, which you can, if technically not yours, but you can still call it yours. And to be amidst that was, again, a great experience, right? Me and my wife ran it for about 7 years. We did another outlet in Basveshwar Nagar. So my first daughter had a chance to be amongst books all the time, lucky in that sense, and I was amongst books, meeting authors, talking to people, everything, and that's when the Chetan Bhagat wave also was happening. And that's a great experience for me to learn how to run an organization, recruit people, manage people, do marketing. I learned business, let me put it that way, right? Business and marketing. So I had technology, now I have business and development for another 5 years. That journey, Hari, again, sometimes, non-linearity I call, right? It's not necessarily in wealth, is the realization for me. The first realization was non-linearity in the first job in technology learning. The second realization was not about just creating wealth. Knowledge is another non-linearity. The second job was like a startup job. You were managing everything. You had pay cards. You had to revive the company, a couple of times. And I was very close to working with the founders. That gave me a sense that startup is not easy, first thing. And if you do need to do that, right, you need a little bit of a iron will to do that. And that 5 years of journey taught me anything more than that. And funny things happened in that journey also, I would say, right? Flipkart was selling books, we were renting books. And we were doing more deliveries than anybody at one point in time in Bangalore. But of course, the paths eventually, diverge and where Just Books is and today, right? I keep reminiscing about those points in life.
Yeah, me and my wife were among the sort of loyal customers of Just Books right up until the point that they closed. And we used to regularly go to the Frasertown one.
Very nice.
Used to take our little son as well. Actually, it was quite sad that it closed up. It was an experience that we used to really look forward to every week. And it was a great model. It's sad that it didn't
take off.
Yeah. I don't know, maybe it was ahead of its time, so I guess.
It's ahead of its time, and some people, typically think, a domination of technology will also remove physical aspects. For example, people used to ask me this constant question, you're doing Just Books, you're marketing it, ebooks is coming, Amazon's coming, 2012, 13, I think ebooks was pretty much in the wave. I had a Kindle also myself. But my answer was very simple. I think that holds even today, right? You can have ebooks also, you will have physical books also. Today, right, I have pretty much switched to physical for some time now. One, probably because the Kindle got damaged. But I think you can switch between the two. There is no issue. It's like, both will exist. Television continues to exist. Just because we have streaming services doesn't mean we have stopped watching cable television, right? It's continuing to exist. I think there's a balance which kind of ends up. Today, both are doing really well. The physical publishing world also is fine. The ebook version also is still fine. I think the same journeys you could see in my other stories also. I've seen that, parallels. So Just Books was an amazing time where I compounded knowledge, learned a lot of stuff, stepped out, and parallelly I was angel investing also, Hari. That is a story. The reason I angel investing is again simply I was chasing non-linearity again. And I want to get into venture. I was also setting up slowly myself since 2008. After seeing Rajesh, how do I get to venture? And that path is to do some startups, understand startups, become an operator. I didn't want to jump into venture straight away saying, I want to invest in these companies. So I angel invested first. I did about five or six companies in India, bunch of maybe about 15, 16 companies in the US. I was just learning.
What kind of companies?
Tech companies. Nothing. I love retail and consumer. I understand that. When I say tech, consumer retail, consumer tech companies also. I did Daily Ninja, for example. I was one of the earlier investors in Trell, Cardback, bunch of companies, very early in the day. To 2013, you could count the angel investors by sitting in the number of table here in Bangalore. So I was trying to experiment and play that game in 2013. And that has eventually led me to role at Kalari. And that was again a phenomenal experience to get opening into a full-fledged venture capital firm and observe what was happening there. And seeing it go through that journey, right, in like 4 years was a phenomenal learning for me again at Kalari. And I think I was looking to start something on my own. That was very clear for me. So I think that journey helped me to set up what I do today. And we decided to start, like you were asking about COVID, right? We decided to start just before COVID. We didn't know COVID's hitting. I decided in December that me, Karthik, Bhargavi, got together and said, we've known each other for long, for 5 years. We said we should do this at some point. And we said, let's do this. December we decided. And January, China has the first wave, and by February we are all working from home. So, the options on was, should we abandon starting it in COVID or continue with it, right? I think I generally believe that once you move ahead, right, you just continue and some things would fall in place. So we said, let's go ahead. By then I had put in my papers at Kalari also. And by the time I quit, it was April. And we started this in May 2020. We were pretty much in the middle of COVID, And how do you raise money? It was a massive challenge for us because we had nothing, we just had a Java website created. So that's where we started Java.
Who are some of your earliest LPs?
So in the first fund, right, it's a pre-fund I call it. This is the second fund that I have. In the first fund, most of my LPs, right, were typically my friends and people whom I knew or Bhargavi knew from her network or Karthik knew from my network. But there's an interesting thing, right, because it was COVID, right, we started an angel investing course to teach them. You won't believe, we were surprised by the response. So we ended up teaching the course for about 10 cohorts, 180 people during COVID online, weekend courses, Saturday, Sunday, 2 hours. And a good chunk of them, became our investors. That was not something we aimed for. We said, let's get some cash rolling in to fund all our experiments. And you had like investors who were willing to learn from us, and we were surprised, and that actually ended up being a good chunk of our investors in the first fund actually, and some of them have continued to invest even into our second fund, and that was a turn of the fortune, for being brave during COVID, I feel. End of the day. Yeah, and now I have a very stronger base of LPs today, a lot of founders. Ex-founders who got their companies acquired, like, I have M2B founders, Where Is My Train founders, then 99 Games, a lot of founders. Founders, is a good chunk of my LP base. The second chunk would be CXOs from large companies like a Qualcomm or a Meesho or any of these large startups, right, where there's an ESOP pool that's got liquidated. I think those folks have been willing to support. And of course, I have my friends and, a few family offices who've been part of the pool. Yeah.
So apart from wanting to, of course, be your own masters and run your own VC firm, what did you all want to do differently at Java versus what you were doing at Kalari and other places?
See, at Kalari also, I was doing, very early stage, pre-seed, seed is what I would call. See, I think you want to be a master of that is a clear indication for a couple of reasons, right? You want to create impact. That was something which I was very clear, right? I'll give you an example. For example, you may have a very strong conviction that, X works like this or this company is good. And you want to put your skin in the game and make that call and decision, right? I think that is one real reason, for me to wanting to do this. Because I felt that I was in the right place at the right time. But I needed to make those decisions, for them to see real value. And Java is an expression of that for me to create that impact in the ecosystem. That's one. Definitely wealth creation is there. I don't despise wealth or capital. I think that's part of the process, and we want to create wealth for ourselves, to our investors, and to our employees. I think that's very clear. Wealth is part of the aim objective for us, and use our expertise to create that. And how did we arrive at what we do today, right? If you look at the first fund that we did, right, slightly more agnostic, given that I come from a technology background, Bhargavi comes from a strong finance and a consumer background, and Karthik's from a healthcare and investing background, just like me. He was also with Kalari. So we were open to all these three areas: consumer, deep technologies, health, and fintech. That's what we were doing in the first fund. But the more and more we worked on companies, right, we realized it's better to focus on a fewer areas where people would be, looking at us, and it also creates our ability to, right to win, in some of these situations. So in the second one, we kind of, figured what's happening, what's the market situation, and we changed us accordingly, and we focused on only two things today, right? Or rather, three sectors, I would say. One is deep technologies, climate and sustainability, and B2B. And all of this underlying story is that there has to be IP here, right? If there is no strong IP and moats, right, that's deep technology for us. You see an umbrella of IP and technology creation in these three areas. That's where we are very, very interested. And that created a nice niche for ourselves. I think today, I think, honestly, I think, people look up and see, how many deep tech investors are there in the country. I think we would be one of the players, what people look up to, at least. I think I'm happy about that. We found some place and niche that, people recognize for what we've done. And I think that's the story we would continue to pursue.
I want to ask you more about deep tech, but before that, can you just, for a more general audience, just give us a broad overview of Java Capital through the pre-fund and the latest fund? How much money have you all raised? How many companies have you invested in?
Absolutely. So the first fund or the pre-fund that I call it as, right, is a vintage 2020. We've deployed about $4 million in 23 companies. And we've had about 13 up rounds in those 23 companies. Includes the likes of Agnicool, ePlane, Sindler, Metal, Codingel, Logistify, Warehouse. All these are significantly, they've broken out and did really well for us so far. That was the first one, deployed till 2022 mid. Then we have a SEBI-regulated second fund, which is our own vehicle now. This is what we call as, Fund 2. Fund 2 is a $10 million fund. We've already deployed in 5 companies, and we've also done crossover investments into well-performing companies of the Fund 1 from this fund, about 4 more companies. So technically about 9 companies in this one. We intend to do about 20 companies, 15 to 20 companies, including the crossovers that we're doing. And that's largely our strategy. We should finish our deployment by mid to early to mid next year. That's the story on the fund direction. In the second fund, if you see, we've done companies like AuditQ, OKO Aerospace, Urja Energy. Again, deep tech, B2B, and that's a strong focus, very clearly articulated here.
I want to ask you more about the deep tech aspect itself. Just want to capture quickly roughly the dates. The second fund, when did you sort of formally launch it?
This was launched 2022. We did the first close in 2022 end. And we've just announced the final close a couple of months ago. We're still open on the green shoe side. We're just closing that out. I think by March, April, maybe we'll stop raising capital. We'll just deploy for the next 1.5 years. Yeah.
Mm-hmm. So deep tech investing, and that too in India, and the examples that you gave, a lot of them are hardware deep tech companies and in very difficult areas where success is definitely not guaranteed. Yeah. So can you walk us through why you want to do deep tech, and then maybe you can also talk about your approach after that?
No, I think why we wanted to do deep tech, right? Even I was telling you that earlier, right? My first job, I had spent a lot of time researching algorithms. So that streak of deep tech was there in me. Two, even at my previous role, right, I was looking at deep tech and SaaS very closely, including the likes of the companies. Some of them I've invested at, I've looked at them very closely. And deep tech has an interesting other flavor apart from any other companies, that it's not easy to evaluate. For every company, right, you have to spend a lot of time. But when you do that right, and that is also the satisfaction that you get of, discovering something new. And yesterday we were meeting another deep technology company. They're doing something totally innovative and new. And when somebody else is doing right, I feel it's a pseudo entrepreneurship in some sense, Hari. I have tried to be an entrepreneur a couple of times. I would have not been a great one and failed ones at times. But I think I kind of also recognize that, it's like if I was doing, I would have done something deep tech. It is something what I wanted to do, I see in somebody else doing. And I think there's a pseudo entrepreneurship there lying in. And that is actually, for me at least personally, to do deep technology companies, right, is like a real pseudo entrepreneurship. On your other question about making on capital that you asked, right, we just looked at some data also, right, globally that's available. There's not much of data to say that, deep tech will not make money versus non-deep tech. Also, there's other reasons. See, when VC started in the US or Valley, right, it was only deep tech. It was semiconductor companies. It was networking companies like the Ciscos of the world. So I think it's only in the 90s, right, when the internet arrived, that, VC has become more about funding internet companies and less so about, technology, deep technology and innovation, right, which is not, I think that cycle is, India never was part of that deep tech cycle in the 70s, right. I think since we didn't do that, now I think, we're getting there, and given all the revival of wanting to do manufacturing and being, Atmanirbhar, there's a massive use case for starting deep tech companies, funding deep tech companies. Will we make money? I think honestly, if you ask me, I think, there's enough opportunity. Like anybody else making money in internet economy companies, right? I think we will still make as good or better. Because fundamentally these are changing, imagine the chip companies like Intel's continue to exist, right? So the fundamental innovative companies, some of them will become very large, is my view, in that way. That way, I think, deep tech is not a poorer cousin from a returns point of view. I don't think so at all. I think they will make good as any other internet economy companies, or even better.
No, my point was that it's very hard as against, and of course, if you succeed, you can succeed spectacularly. I mean, NVIDIA, I think, is now in the age of AI, a classic example. So, can you talk a bit more about?
I'll just add why I do deep tech also, right. One is there's a personal set of reasons, and the approach, right, is it's hard for others to do deep tech. Also, it's a barrier to an extent, to understand what is going on, including sometimes, I take time to understand. So I know if somebody's not spent time in technology really, right, it's not easy. So imagine you're being thrown into a swimming pool every time you're evaluating a company. It's not like in internet economy companies, right? At least you have a sense of what I've already done, like a mile. The next mile is I learn. The third mile I'll make it easier. But in deep tech technology, it's like every time you're being put into the pool and sometimes into the ocean, right? So you kind of need to develop some resistance to firstly evaluate deep tech companies. And every time you go, you should be willing to be dumb and learn. And go read and learn, read. That's been the cycle. The approach is simple. Whenever I am evaluating a company, I look at it from my sense of perspective. If it's interesting to me, I go read. Read YouTube, podcasts, read as much as possible. In case there is a book on that sector, go buy. For example, if I'm evaluating semiconductor companies, right, the first thing that I did was, even before we started evaluating semiconductor companies, I just read, just for the use of it, I bought the chip for, read a couple of other books, then spoke to 2-3 folks who are working in the semiconductor industry. A lot of my colleagues are continue to work in various companies. So that is a good access again. I have access to folks from my college or my friends who are all in either a Qualcomm or an Intel or an Apple. That's a nice access to know what's really happening also. Then I just go ask them, if there's a semiconductor company here, do you think what you guys are thinking? Is there something that's happening here? That's the approach. Read, talk to a few folks in the industry, and then go to the company. It takes easily like 2 to 3 meetings, spending with different members of a deep technology company. There'll be a CEO person, sales, then there'll be actual technology person, sit with them, go deep, into the algorithms, understand the workflow from customer to who the seller is, do all that. It typically takes like maybe about 40 to 50 hours collectively from the team to come at a decision, do we want to go ahead or not, to even push that story if it's a very interesting company. That is largely what we do, and we have enough expertise that now we've developed internally as a team also. And we go to classes, by the way. If you give you an example, our analyst has attended a semiconductor class to understand what's happening there, right? So we are in the learning mode also parallelly, right? Like yesterday I spent like a couple of hours understanding the export market with a person who's doing exports. We don't understand everything or claim to understand everything. I think that's like the first thing we should do. I think in anywhere in deep tech, it's even more, humbly you need to accept that, you don't know about it. It's very hard to go deep into it. How many layers can you go deep, right? And peel the onion, you will get that level of possibility. But again, it helps that I've done technology and marketing and then investing, right? I think that unique lens, right, really helps me. 3 different things that I've done over 5 years, it just comes to some great use when I'm evaluating companies.
That's a lot of insight there. I mean, even the earlier point you made about how in the US, originally what they started with was actually what is today considered deep tech. Back then they probably didn't even call that. And I think in the 2010s, probably the word started coming up. So a very nice description of your research process and approach. Can you take that to the next level and talk about what are some of the things that kind of need to stand out when you look at a startup, when you look at a founder, those check boxes which allows you to say, okay, I'm going to invest in this deep tech company?
I think founders, what is the reason for the founder to do that, right? I think, is he driven? There has to be some story behind, somebody doing a deep tech company, Hari. You take Agnicool's founder, again, India, goes to the US, does industrial engineering, then does aeronautical engineering, quits the course, writes to somebody in IIT Madras, finds a professor here saying, I want to do this, right? I think there's like a lot of persistence and tenacity. And I think that we need to identify in our founders, who are trying to do deep tech. If that's not there, right, I am going to be very little, first characteristic to do that story. Then expertise. Are you anyway related to that sector in some form? Unlike an internet company, right, which is much more, let's say, easier to get started on. Deep tech company is not easier. So you need to have some background or expertise in that sector, or you should have your team members who know that sector or an expertise of the past. I think those 2 are the first criteria to look for. Founders and the team, does it have expertise to do that? If these 2 are there, then you look at them. Next is the idea or the problem itself. And there has to be some innovation. Let's be honest about it, right? I think if there is no fundamentally new thing in deep tech, right, what's the point in deep technology there, right? You have to innovate something new, some new thing which is different. See, it could be an incremental innovation or it could be like a 10x delta, but have you at least thought on those lines is really important, right? I think we see that, right? If you look at Agni, they had 3D printed, first of a kind, semi-cryo. If you like to look at Schindler, right, they were doing a new approach to machine vision, by using temporal mechanisms to detect objects, unlike, typical spatial detection for objects. And if you look at somebody like an Urja, right, energy, the battery pack is getting simulated, what with the state of the art, using AI ML algorithms. That way you'll know, can a thermal runaway happen? So that expertise comes because all the 3 founders have done that physics-based simulation for some other companies. Now to replicate that for this company with added advantages of today, the AI ML is a story there. So in every company, you'll see something fundamentally new, something that's changing the world in some sense, right? And the changing the world is what gets me excited, or the team gets excited, saying, okay, here's an opportunity. The founders are trying to build something which might change the world. And here's your opportunity also to be a part of that in the first place. That's a very optimistic way of looking at it. And I believe we have to look at it very, very optimistically before you say no, and give that benefit of doubt to the entrepreneur and founder to give a very optimistic story to you. And then you can criticize. And I think we have that mindset all the time. We keep that when we're evaluating. Founder, idea, innovation, something new. These sorted, I think we're good there. Then we look for the usual suspects. Is there a competition? Somebody else is doing it. We do an IP check if required. all those processes to be done, and then we can kind of go ahead. All these meet. Then in deep tech, again, you need to spend a lot more time. That's the only story, if you ask me.
And in your experience, of course, it's still a nascent ecosystem. What I wanted to ask you was the early experience about what works in India. What are the big challenges in building a deep tech company out of India? What have you found so far?
See, the early experience capital, right? I think now we are fairly sorted in the early stage capital. That means pre-seed, seed, almost there. Series A also, I think we've got some amount of domestic capital that's starting to come in. The new deep tech focused funds being started. This is great for the ecosystem. The missing piece of the puzzle, especially on the funding side, is your B and C, right? Is very hard to get. Even now, right? It's hard to get. One, because I don't see, the Western capital typically that we are dependent on, on the next stages. Typically, I think they still think, we are not so great at innovation, possibly, which I think we have to prove it wrong. And I think that's why that capital is still not yet fully there, but it's slowly starting to kind of come and play. I think that's one capital problem. But of course, the government also saying, they're going to set up a deep tech focused corpus. I think that should also hopefully reduce the pain a bit, especially for Series A plus kind of funding. That's on the funding side. The other problem is, see, to do deep tech, right, you need to have deep research in institutions, which could either be corporates or academic places, anywhere, right? I think that ingraining of deep research, I think research for translation into products, which I think is a missing piece of the puzzle here in a way. If you look, right, I think there are very few Indian institutions which have a separate focus or have a separate place for translational research. That means great, you would be researching great ideas, publishing great number of papers in all the journals, but has it really translated on the ground to great products for the Indian population or for the global population, for all that investments that has gone into universities and research? I think that's the question to ask. Amount of translational research if you really want to do deep tech. But again, I mean, I'm optimistic here again. I think IIT Madras's Research Park is a classic example of, what is possible in deep tech. And I also see IISc doing a phenomenal job in the last couple of years. Pretty much, I'm starting to see that, I think people are thinking, we're just not doing research. We need to do research. Parallelly, it has to get into some form into building products. And it is a part of, I think, some portion of it is nation building, is also, I feel, research translating to some really usable products. I think that's starting to happen. And that's not only two institutions, right? C-Camp is an, again, massive institution that we see, bio and health sciences being encouraged phenomenally well. 3,000 companies, I think, if I'm right, over the last decade and a half. Then you have Hyderabad, then Pune. Everywhere we have a cluster where deep technology research is happening. Translation, I think now we are doing. And I think the next decade we'll have a lot of translated that research into solid products and services globally. And this is a global platform. Deep tech is a global platform in general. It's not necessarily an Indian play always. Yeah. We are there. Those two are getting addressed, I'm hoping. Government's funding. These two are the major problem. Talent is the other problem. I think that we can, again, it's not like we don't have talent, right? We have like 3 lakh chip designers working for all other global companies, right? If even 5% of them quit, say, I'll do a fabulous company tomorrow morning, right? We have enough designers to do. But do we own the IPs? Because we are doing it for others always, right? Like even when I was working in my first company, right? I was writing the code which was proprietary to the global mobile providers like a Nokia or a Samsung, right? I was not writing, but it's like our folks were writing all the stuff here pretty much. A 5G, 4G stack also was written here, an LTE stack was written here, but it was written for Alcatel or Nortel and not for an Indian company where we hold the IP. I think that has to change fundamentally. We need to hold a lot of IPs here, and that will continue to encourage investment. And last thing to add is R&D spend, right? I think we don't do much of an R&D spend. I think it's hardly at 1.3 or 1.5%. That's the range of R&D spend, including corporate and government, right? And that's too less.
As a proportion of GDP.
Yeah, it's very, very low. For a developing economy, we need to kind of push that up. I think corporates also, right, talk about R&D, right? But I don't think so. They also spend a lot of money on R&D per se. I think that has to go up if you really want to continue to be innovative. Yeah.
What's next for you in terms of deep tech? I mean, through 2024, just want to double down on more investments, or where do you go from here?
2024 is looking very exciting. My prediction is you would see a lot of non-deep tech folks starting to do deep tech. Is my clear open prediction.
VCs, you mean?
Yeah, VCs. I'm saying VCs would extend themselves to doing deep tech, who've not done deep tech in the past decade or past 5-6 years also, right? Will want to jump onto the deep tech bandwagon, which is good. So it's going to get a lot more competitive deep tech itself, which is again a good sign in a way. That's my trend, at least on the deep tech reading, and it's happening for two, three reasons. I think one, the progress on Gen AI and on the LLMs, right, is created a vacuum for just funding. You can't fund a pure SaaS or a workflow software, right? So that's like kind of got held up there. So you have enough capital, but what is the place where you can invest where there's a physical manifestation now, or a strong protection for your investment, which is either an IP or a physical manifestation of the product, which is a hardware. So I think VCs will go towards that physical manifestation with hardware and IPs at one side of the story, or they'll look for consumer internet and consumer brands, because that's also some physical manifestation where it's not, LLM is not going to push these two out of the story. So that will continue to happen. That is a good, and you will have enough money coming towards deep tech companies, and that I'm holding as a prediction since like last 3 months, saying I think 2024 is going to see a lot of deep tech investments than we've ever seen in the last half a decade in 2024. And the momentum of deal making is also going up, I think, at our stage. I'm like doing at a frenzied pace, looks like, compared to last year, right? I'm already like committed to 2 more term sheets, and I'm pretty close to a couple more in the stages. That's like just 4 weeks into January, I'm saying this, right? Everything happened in Jan. Pretty much all this happened in Jan from the first conversation, maybe a little bit in December, but I'm out there like probably doing 4 more deals in this first quarter. And I said I will finish my entire deployment next year, but maybe it'll happen even quicker is my assumption, given the pace at which deep tech. I'm also starting to compete with a lot more players now than the past. So that also creates more necessary momentum and action for all ends for us.
Give us a sense of which are the verticals and horizontals in deep tech that you are very excited about as a VC investor.
See, I think I call every company a sector in deep tech. That's what I call, in deep tech, right? But to get to that, still, right, I think semiconductors in the fabless, creating IP space, I think there's a lot of action that's coming through. But one is you could create replacements for what's happening in other countries. That's still in other companies largely, right? You're creating the same thing, but you're doing it. IP is based in India. That's one way of semiconductor. There also could be other ways of doing semiconductor companies which have some new paradigms and directions also. Those are 2 possible plays in semiconductor. And I am still very excited about what I call as, internally we call it as around EVs. Not EVs per se, but around EVs, right? There is still some space, like Urja is an example of that. For example, grid infrastructure and how do you build intelligence on the grid infrastructure, right? Because the more EVs comes into play, right, your grid will not be stable. And when grid stability, how do you achieve, and how do you achieve different times of charging? A lot of software play on the grid side will come. I feel in and around EV is what I call this as, not EV per se. EV per se, I think, we are done with in a way, high capex models. We would continue to pursue space technologies still. I think there is still a lot more to be done both on the upstream and the downstream side. We will continue to look at. The other area that we kind of started looking in the last, I think I would say about 6 months from the year, is biosciences and health sciences without doing medical devices per se. Anything that requires a long FDA cycle, we don't want to do that. But anything which is enabling software, accelerating what's happening in healthcare, right? I think that we are keen on. So we've done a couple of companies like Helium in the past, which does kidney prognosis using AI imaging. But that area is something still. Again, that's a deep technology IP play. It could be tools for diagnosis, tools for accelerating drug discovery, tools for building new discoveries of materials. I mean, today, right, you probably can put the machine to work to discover molecules quicker than ever it was possible by doing it in a lab and a wet lab process, right? I think those are areas to really keep an eye for, if you ask. And I think that's where we are currently, at least, a lot of our work is in these areas. Yeah.
In semiconductor, some of the examples that you were probably thinking about when you're talking about fabless and building it in India, companies like Inco and Mindgrove, to your mind, what are the challenges that they face?
No, I think we've not done that before. That's going to be like the first challenge most of us are going to face, once one or two have done. But we've had past some examples, like you've had Cosmic Circuits, in 2007 that got acquired. We've had Insilica. These are not known names. Insilica was a semiconductor company, IP semiconductor company. We've done it. It's just that, we've not seen that from a VC lens so much. We've done semiconductor companies, few, but we've not seen from a VC lens. So the first time we are seeing from a VC lens, right? I think that's a challenge that presents both the VCs and the founders also. Will a semiconductor company behave in the same manner that we expect what has happened in other companies in the past? And that only time is going to give an answer to that. And for founders also, right, because they're building semiconductor companies for the first time, right, there are not too many examples of how do I approach, how do I do things. I think that's a learning curve for all of us. Just like we learned the internet economy or the SaaS economy, right, I think we will learn the semiconductor economy in the next 4 or 5 years, and we'll get there, I feel. I think that's going to be, these are the challenges. I think we don't know yet all the pieces of the puzzle. So we will get to learn from whom already know. And we have people, but I think that's not the problem at all. That's a great advantage, right? We have enough folks who've done either the Western world or, designers in India, architects who are working for some of these large chip design companies. I think that talent is there. But when you do it for ourselves, how do you do is going to be the only challenge in some sense. And will the follow-on money come again? It's a question to ask, right? But I think the policy is aligned again, given the government's policy. And that is also the reason I think, I think policy is also driving some of the investment strategies of firms, Hari. We should be honest about it, right? There is a policy push if they're encouraging investments in semicon, right? It means there's a nice encouragement. Then you go along with that, the boat, and play that, it might still work as long as it's aligned with what you're thinking. And I think that's what's happening on the semicon side. The space side also was a classic case of that. The government's policy coming in and taking everybody higher up. I think we should also be lucky. and I think we didn't influence, everybody didn't sit and influence policy, right? So for deep tech, right, policy is also needed, directionally to see, can we do this XYZ? I think the policy is currently in the right place or directionally in the right place. So it's kind of creating that thing. So policy is not that challenging for anyone yet. So it's like, at least it's in the right place. And if new technologies come, and if the policies come ahead or in time, right, I think that will also encourage us to what's the next new thing. See, LLM, we feel like we've got left out of the wave, right? We should actually think, why couldn't we be there ahead of that game? In a way, we've been left out in some sense, right? We've been left out only. So semiconductor, we've been left out for long ago. We're just trying to make a comeback here. So in the LLM game, will we be left out? I think currently we are not in the top of the game, right? Everybody has put France to the Middle East as a significant model that's working, but our models are still getting...
We need 100 servers. Yeah, correct. Yeah. Just to stay on the semiconductor topic a little longer, what is your assessment of, whether we will eventually succeed in having a good foundry in India, real commercial scale foundry, and how important is that? I mean, this is, of course, starting trouble, and historically we have had lots of problems with it. But now it feels like there's something that we really need to do. Is that correct? And if it happens, do you think we'll get there?
Look, to do a state-of-the-art foundry, I don't think so. We are like anywhere near, right? From a technology point of view, I think nobody is going to give us all the technology. So it's not. I think we are. Let me put it in an analogical way, right? I think we are at in I say LKG or like let's say first standard of the semiconductor possibilities that exist, right? The easiest strength that we have today, the strength we have is we have designers, we have enough knowledge about how to design a chip. When we talk about foundry, right, to put a state-of-the-art foundry at like the nanometers that TCMCs or anybody else is thinking, right, that requires hundreds of billions of dollars. I think today only the government can do, in a way. And first, putting so much money and making sure you get everything, all the technologies that's required in one place, right, it's not easy because it's pretty much controlled, right? You have ASML that's controlled. There are pieces of technology which is controlled by the Western markets that's only available to a few players. So imagine if tomorrow we go and say, boss, I have the money, can you give all the tech? Will they give us the question to ask? They may not give. So what we are getting is like very, maybe we'll get to some smaller 45 nanometer or all that. We'll start somewhere there. It'll take us like a decade, I think, to get there. I don't think so we'll sit and we'll be able to develop everything from scratch, right? You can't develop like a lithography that's been happening for like 3-4 decades, right? Overnight you can't develop. You'll have to buy and slowly develop other strengths which they need to depend on us. I think today that's the design. But the point is, design is like easy movement. No, you can't hold on to. So everybody's sitting in India, and that's the strength, right? That means we should have all the IPs with ourselves. And then if you can sell the IP to Apple, you sell the IP to any consumer device maker, right? Sell the IP, right? Could be the strength for us, right? But do the fab that because of strategic reasons, if you ask me, right? Just have something, as a backup possibility so that others don't. It's like a national strategic reasons for it. To have a fab and capable of producing, but if not the latest, at least, 2 generations before that, for the strategic reasons. By the time we figure it'll be a decade or more for us to, I don't know if we'll still be like getting there. And I'm not being very optimistic or only on that one, our ability to get to state-of-art foundries, I have my own doubts. That still is a lingering doubt, but we can do the others, do everything else that we are capable of in a way. Yeah.
Okay. I wanted to pick 1 or 2 examples from your portfolio that's already there and just talk a bit more about it. Companies like E-Plane and even Sindler, these are some companies that I've tracked, and I know that because of, like you said, they have actually managed to break out of the initial phase of struggling with the product development and are now closer to commercialization. Certainly Sindler is, and E-Plane may not be too far from it. Some of the others. OKO Aerospace is a company I want to know more about. How did you stumble upon them? What's the story there?
So OKO is Bhargavi, my partner, stumbled upon. Paradhi, the founder, right? He's a good friend of ours from the past. So he said, I'm building, a drone version, a long endurance version. So typically most of the drones that you see that's being used, right, they don't have a battery life of more than 45 minutes. So you need to use it like 45 minutes, then replace the battery, again put it back. Especially that was a classic problem in drones, except for the defense drones, which have, if they are fueled, you get long endurance, but still not battery powered. Battery powered drones, there are very few players in a way, right? So getting long endurance is critical, especially for defense monitoring and all those cases. So when we went and met, we saw a prototype in the office, and this was a one-man team. In a sense, when I say one-man team, single founder, there's a risk. Typically people talk about single founder, and he had assembled and done a phenomenal job to get the company to the stage that was already there. And we were the first investors. We said, we will commit to that. We saw that, it's a possibility that you can build a long endurance solution, which is between a satellite and a drone. Drone is like low height today. This is what we call as high altitude vehicles, or a pseudo satellite. Between the satellite, we said, there's a massive gap between a satellite and the satellite. You have to launch once, you can't repair nothing, it's very hard, and you put your instruments there over. In this case, right, you can change your payload and you can get better data than that. Put it on lower altitude, you will get a better, higher resolution data. And if you can get this to a 24-hour to 36-hour, which is the goal, you are in a great situation, right? You do that, and it is solar powered. That means it's getting charged as it flies. So if it gets to a stable state, right, you can leave it up there. That's the long-term vision. So instead of launching a satellite, to take imagery, I'll just launch this drone and allow it to loiter in a particular area. and take all the data that I want to capture and bring it back and change the payload again. And if there's a repair in it, I can repair it also. So it could be a solution for, so you have large satellites, and this decade has been about small satellites. Maybe, that small satellite market will slowly, trickle down to this kind of a solution a bit. You don't need to keep on, putting all the things in the satellite. This solution might, become a pseudo satellite. That's what I'm calling it, as a pseudo satellite solution. Oculo's vision is to get to the pseudo satellite play. And the defense is also interested in solutions as such. And then also the commercial market, especially like oil pipeline monitoring. A drone can go up, then come back in 45 minutes, right? If you have a longer endurance, you can just fly it along the direction of the pipeline if you're given the waypoints. That's like a use case. Or you can monitor your course, and loiter around the coast and see if any foreign ships are arriving or anything that's happening on the coastlines, right? You don't need to have personnel to monitor. You just fly this multiple of these, you'll keep monitoring what's happening on the coastline. So nothing goes wrong there. So use cases are immense in my view, but you need to be prepared for the cycle of, getting to build a long endurance which can stay there for a long time. Yeah. And that also comes with improvements in battery technology, improvement in efficiencies in solar panels. As all these adds up, right, then your ability to fly longer kind of keeps going up.
Where are they based?
They're based in Bangalore.
Bangalore. How old is this company?
This company could be about 3 or 4 years old. We invested in like a year ago, I think.
And how far away are they from first commercial?
The V1 is getting type certified because it doesn't require a new classification. It would be classified as a drone depending on the size. So the first one is getting type certified, V1. V2 is in the works. And a version for only the defense, that's also in the works parallelly. So it should have the V1 once certified, we should see a lot more commercialization possibilities in the next 6 to 8 months. And they'll continue to develop to get to that larger vision story, right? That will take some more time. But the ones which are already there, it can continue to fly as such, the V1s, yeah. We are not too far. Maybe about 12 months, we should see a lot of commercial options there, yeah.
As we went along, I thought just focusing on deep tech itself would probably make a really nice conversation. So I just kind of stayed on point on that, and I was thinking in my mind that we can come back and do separate conversations on climate tech and also, of course, the whole sort of VC journey aspect. Because I was not looking at this as a one-off.
Okay.
And I thought it was a good introduction to
what we do.
What you do. That said, anything that you want to highlight in the context of this small conversation before we wrap up?
No, I think the only thing I've been thinking, right? So there's this conviction-based investing. You might have heard, right? Lot of founders, right, need to, when they go to their investors, who are they taking money, right, they need to understand, do the investors have conviction, especially if you're doing deep tech, right? If it is only about capital, I think that everybody has access to, but do people have conviction on what they are investing in and why they are investing, right, is sometimes missing. I think founders need to make sure that is there in the investors also, because the journey is long, right? If something breaks in the journey, a person or an investor who understands that company well, he would support it still. I think if the money, or it's only been a capital play, right? I think then you're talking about very cold capitalism at play. I think that's something for founders to watch out, especially because not everybody gets deep tech easily yet. We wish if a lot more people can do this. I think that's something I would ask founders, especially who are doing deep technology and climate and sustainability, to see, look, do the investors understand, what are you talking, do they really care about this problem statement? Do they really care about why we are solving this, is it? I think that's something that founders should evaluate before taking capital from investors. That's one thought, especially for founders, yeah.
Another thing that came to my mind, and what you were talking about founders, jogged my memory about something that Professor Satya had told me a few months back about how a deep tech founder may not necessarily need money for commercialization per se, at least in comparison with the upfront money they'll need for product development. Whereas that is not happening yet in India to a large extent. I mean, typically VCs would probably invest at a TRL level 7 onwards in India, whereas in the US it's much more established. And of course, I mean, we know the historical reasons and all of that. You spoke earlier about your approach and what you look for and so on. Even given all of that, how do you take a call when you meet a deep tech founder when all he or she has is an idea?
See, I say, we are starting to invest from TRL 3 onwards. TRL 3, 4 is like good for us. So that's one clarity. If somebody says, here's my TRL means, we're saying, we are very happy to invest. Of course, that doesn't mean you just be on TRL 3 means I'll put my capital in it, right? We want to evaluate the rest of the equations, See, even if it's an idea, right, the expertise will really matter, Hari. If it's an idea, we've done a couple of them like that. But in deep tech, right, I think if it's a solid, experienced founders who come from that industry and they're saying, look, this is the problem that we're willing to solve, I think we'll still be willing to listen and, back sometimes. But it's always good to see, you put something, at least something on the table, It could be an idea to a prototype. Prototype is good enough for us. You're saying, if you look at any other, some of the companies, right, like an OKO had just a prototype. It's not a full-fledged product that we ended up investing, right? So we are good with prototypes, TRL 3, 4, we can kind of look at that. Given that we are even pre-seed, seed that we start doing, we're willing to kind of, take a bet on those. So yeah, although we need to factor then, there are chances if it's a completely new founder, like when I say first time founder who's tackling a deep tech problem, then you are thinking a lot more TRLs, a lot more validation because you're doing it for the first time, not from the same sector, but it's okay. But as long as you're passionate about that problem statement, right, you will still be able to crack it. It's not necessary that you need to come from a rocket factory to do a rocket, right? If you are still passionate, you demonstrate that along with some validation, a little more, either you are experienced and proven in the past, that's one part of the story that's working, I feel, or you do some, more validation of the product itself, which gives you an ability to raise capital. I think a lot of VCs today are willing to take that bet in deep tech, TRL 4, 5, I think people are willing to take those bets.